Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Friday. Today's 23rd June. Welcome, everybody. For those that watch later, go ahead and subscribe to the channel. I haven't been growing it too well, but like, subscribe, type in the chat, all that good stuff. That's supposed to be a YouTuber thing, right? I got to get better at that. In any event, welcome, everybody. First, let me mention I have a class upcoming this coming Thursday, Nest Egg. It's all about covering several topics, very important. How to grow your nest egg, i.e. your 401k, your retirement account. Hey, JT, long time no see. Talk about, there's a bunch of topics. If you're interested, go ahead and hit the link. It's going to be some great stuff. I haven't really, I'm actually have a really nice options class going right now. Yeah, JT, I mean, it's been just chop, right? It's just been very kind of summer doldrums, VIX at 13, not a lot of volatility. We actually, if you watched Friday of last week, we came in along some puts. Options have been working better because it's not as frustrating as, if I buy a put, I don't have to worry about getting stopped out and getting all the chop and all that. So we actually did well with our, we came in with some puts, as put it on last Friday, some 439s in the SPY. Covered those yesterday, in fact, right near the lows. And we actually put on another set of puts going into the close today. I still believe, market just keeps kind of meandering. If you look at the chart of the S&P, we hit, we hit the highs last Friday, a week ago, right around the 4,500 level. And literally, if you look at the chart of the S&P, it's just been how else? If you looked up meandering in the dictionary, right? If you pull up like a 1 hour chart of the S&P futures, man, that is about as meandering as you're going to get, right? Just kind of this slow, steady drift, right? Or whatever terms you want to use. That's the way the market's been. In fact, since Tuesday, the market's moved down a whopping, 35 points or so from Tuesdays when I was here on Tuesday. So, again, look, it's this is going to change. What happens when you have the VIX this low and not anything? Generally, if you've been around this business as long as I have, it's just like it's the you kind of just drift along here. We got all kinds of cross currents, clearly still buying the dip. You've got but something out of the blue, if you go back any kind of time, and again, who knows what it's going to be, out of the blue, something comes in and knocks this thing, right? Yep. So you just never know. But one of the things, again, that I've been kind of talking to people about, we've actually had, just doing earnings play, FedEx this week. We tried that. We didn't get filled on that. That actually panned out. We actually did not. We got next week. We're looking at Nike. We're looking at MU. We're looking at STZ, Constellation Brand. So that's kind of what's been working lately in that regard, just doing some options play that post earnings. We had some really tremendous trades this month. Dollar General was our monster hit this month. If you look at that, probably the earning post earnings. So yeah, you just kind of maneuver around these markets. And even, the NASDAQ got hit. So let's just, again, you've got a 43.6150 kind of a rally-based rally. And then you got that rollover gap. I call it a rollover gap from 4,300. And that's simply because if you use these continuous unadjusted charts, that gap was created simply from the when we dropped off, the June contract and started tracking the September. There was a huge price disparity, and that's what creates that gap. That is not a demand gap per se, right? That's just an adjustment to the price chart from the transition of the June contract to the September. But again, some people like to trade that. I personally don't. Um, but if you just look at the base rally from 43.60 down to 43.40, that's really the next target, right? If it's going to hold, and again, there's nothing seems to be kind of knocking this market down until it does. So we just keep, that's why I think just buying puts, holding, we went out the next Friday, bought some more puts. And if it just corrects down to, this 4,300, that takes the SPY, which is what I've been doing, takes the SPY down to about, I don't know, 425. So that's pretty good. I mean, we're not like, obviously this market's not moving a lot, but a few $300 here and there every week adds up. So those are the levels there. The NASDAQ, again, still, it was kind of knocked down on Tuesday, Wednesday, rallied. If you look at your charts, by the way, it did rally up to 15,230. Kind of an ugly, we had that drop on Tuesday. Then we rallied back up to the point of that drop, and then, kind of just chopping around as well. In fact, we're trying to get long the NASDAQ futures right around the 14,800 level. You can see that very similar. When you have a low VIX, does that mean low volatility and lower? Well, it depends, Jim. Specifically, the VIX. So here's the thing. Specifically, the VIX tracks the S&P SPY, right? The S&P. That's it. So, yeah. So if I were to answer that question, I would say yes with regards to the SPY or the S&P or the SPX, right? So yes. However, if that means okay, look at a stock like Tesla. That thing is swinging 10, 15 points a day. The implied volatility on that stock is 780. The average range on that stock is 910. Does that make sense, Jim? So there you go. So when you ask me, right? So specifically, VIX, again, VIX tracks the S&P 500. Period. Here's my point to that. You need to understand that. And by the way, that's why if you've been watching these videos, what have my members and I been tracking? Have we been trading Tesla? Have we been not doing a whole lot in the futures market? Yes, yes, and yes, right? Well, that's what, yeah, it's so did somebody put a gun to your head, Jim, and say you have to trade the S&P? Or can you expand your horizon a little bit and go out and trade some stocks, go out and trade some options, go out and do all that? You understand? This business is about making money, as I keep talking about. This business is about making money. How you make money doesn't matter. Again, nobody says I have to make money trading futures. I have to make money trading the S&P. That is a bit of a challenge, right? Anyways, does that make sense, right? Okay, all right. So on the Nasdaq, you got that level there. We got a higher level, 15,510. Yeah, you can do that. Yep, Jim. That's exactly right. Let me just kind of recap here. Yeah, a lot of range trading in the indexes, a lot of range trading across all markets in particular, right? Even the Dow kind of just drifting along here. I've been actually more focused on the Russell. The Dow, I don't really track. It's just 30 stocks, whatever. So I'm looking at the Russell down around 1800. I think is going to be I was looking for a little bit higher level 1950, and it's actually pulled back pretty hard also. But you might want to take a shot at the Russell. The Russell's actually been moving much better, if you will, just more movement, bigger range. In terms of the indexes, I've been largely focused on the future side, mainly on the Russell, because again, it's done. So if you in a nutshell, I've been focused on the grains. I talked about that. I've been focused on nat gas. I wrote about that this weekend. In fact, we're in KOLD options right now. You guys know what KOLD? They actually reset Boyle also. Remember Boyle? 25-to-1 inverse or reverse split. I've been talking about that, because at $3 they were going to they had to do something or else it's going to go to zero, right? So they did reverse that, which is going to be great. But we're actually in the KOLD, which is the short, but we're actually long puts on that. And I did write about that over the weekend. If you haven't taken the newsletter, check it out. I gave that actually, if you read my newsletter this weekend, I actually specifically talked about KOLD and a breakout in the nat gas, which happened just today. I don't know if you guys are watching nat gas. Finally, it looks like it's going up to 3 MBTU. So that's another market I've been largely focused on. And the rest of these markets, with regards to the bond market, mess. Pull up your chart of the 30-year, just right, a big old mess. Similarly, 10-year, just nothing. I mean, just big chop, back and forth. Leave that alone, right? I haven't been, we haven't been doing anything with that. It's just nothing to do. It's just you're going to get all chopped up and whatever. Dollar also all over the place. We did hold that 102.14. I did mention that actually last Friday. I mentioned that. Yes, Tuesdays. You can look at that. That's basically just a reversion to the mean. We broke out. Remember, we were in a range between April and May. Broke out, rallied hard on the dollar, came back. Now we're kind of in no man's land. And this also translates into a bunch of chop all over the place in the currencies. Again, if you've been attempting to trade currencies in this environment, good luck, right? It's just been really tough. The yen did break down, by the way. I think I've been, so we spent pretty much all of May just chopping around, and it looks like the yen is finally breaking down. There is a level I'm looking at to buy the yen. I think I mentioned this right around the 6.0069 level. Yep. So check that out. Now the yen looks like it's finally moving out of that consolidation, that big ugly range, and starting to get some movement. So that's something that you guys can pay attention to. All the other currencies really, the Aussie had this monstrous we had a drop, monstrous rally all the way back down again. So there's really no follow through on a lot of this stuff, right? Not any clean levels to trade against unless you got some momentum or something. So similar, New Zealand, not as much. Canada just chopping around as well. And peso, remember, we've been talking about peso. Now peso's also now settling into kind of a choppy range, which means it's probably going to break out at some point. In the metals, silver is starting to move a little bit. It's coming down to that 22. It's kind of that big, ugly, I would call it, like a daily demand zone, a daily accumulation area around 22-ish, something like that. You can see it on the charts. Again, not highest quality, kind of just big old ugly bunch of wicks all over the place. Lacking in any kind of quality. So, but if you want to give that a shot, that may be worth something. And gold dead, Copper also pulling back after a big meandering type of movement. Oil similar, back and forth. Big clear range on oil, 70. Let's call it 74, 74 and a half, down to 67. So oil also range bound. And it's very discernible on the charts. I mean, all you got to do is pull up a daily chart of oil, and it's pretty clear cut right there, right? You can trade the extremes on that. Stay away from the middle. I just mentioned nat gas. We finally broke out, and again, we are in this trade right now. We finally broke out above the 286 MBTU level. You can see there was a resistance there, and finally broke out today. There's some weather issues, as you know. I think there's some heat waves and all kind of weather. So that was part of the issue. Yeah, that was part of the why we're looking at that, and I've been looking at that since last week, because now we're getting to the summer. A lot of what drives, as you know, price of nat gas is weather related, and you got El Nino, you've got some weather patterns changing, demand probably starting to come back in again. I think there was actually something about Panama Canal, South America is now seeking to get some of our LNG and so forth. So a lot of fundamental, but you can clearly see on the charts we finally broke out after last Thursday we had a pop, which is actually what really got me started in that, and that was all fundamentals. And then we kind of just chopped around, and now we're finally breaking out. So hopefully that, again, there's a gap on the charts in nat gas at 3 MBTU, which I think now that we've cleared this resistance, that is probably going to act almost like a magnet. Now the gap does open at 281 and then fills around above 3, which is that last big pop from, if you recall, from back in February. We had that huge rally that failed miserably and took us all the way back down to under 2. So I think that's probably going to be the gravitational pull that brings that market up to that level. Grains, I've been focused on grain markets. Soybeans had a tremendous rally. Unfortunately, again, we weren't able to get long. I was trying to get long somewhere at that daily. There's a huge daily, weekly accumulation on soybeans. Now we're heading back up to these resistance levels around 1525, 1550. Still watching that, see if this is going to continue. The shallow pullback suggests that it's going to continue. Wheat also, so the whole grain complex really having some really nice moves. Wheat at 8 a bushel could be a good short. And corn is actually the one that pulled back the hardest from this latest rally. And we did miss that. I've been talking about shorting corn up around the 7 a bushel. Clearly, we didn't get that high up, and now it's pulling back. And now getting into, again, it was very messy, and then it, took off above the 620, and now it's giving it all back. So very, very, but again, lots of movement in there, right? Lots of movement. Those are markets you got to be focused on if you're going to, if you're going to get some kind of reward on your futures trading. Got to stick with the markets that are, stretched, having some nice movement, and allowing for these extreme levels, which are always the highest probability. Okay. Yeah, I think that pretty much sums it up. Next week, the only piece of data other than more earnings, like I say, and we will be at TTS, we are going to be focused on, that's been working really well this month with options. So we've got MU on Wednesday. We've got Nike, which we've been involved with before, and then on the open Friday, or before the open Friday, we got Constellation Brands. So those are the earnings play for next week. And then PCE would be the only really big economic, that core PCE. That's on Friday. That's what the Fed looks at. And then we've got the jobless claims, and there's other minor stuff in Michigan and all that University of Michigan, I believe, and so forth. But so that's really kind of what we're focused on. Going to end, to end the month here. Then we're going to 4th of July. So, still lots of, lots of cross currents out there. I think the Fed's probably going to tighten again. That's still, it's still something to look at. Yeah, it's, again, just as JT's talking about, yeah, it's been a bit of a challenge, unless you're super nimble in trading some of these indexes. But I think maybe next week we get a volatility break. The VIX sitting at 13, something usually comes around and knocks this thing. Again, who knows what it's going to be? There's still so many things out there, but we'll see. Lastly, again, if you're interested in the class, it's about retirement. It's about buy, selling calls against your positions, laddering T-bills, hedging against, we're coming into some rough months, by the way. If you're having a retirement account, you want to learn how to hedge it out. August, September are the toughest months of the year. And again, the way we're setting up right now, it wouldn't surprise me if we get, some kind of turbulence in the markets. So if you are interested in learning something like that, hit the link below for the details on that. I'll be tweeting about it and so forth. Okay. All right, everybody. Again, thanks for joining me. Have a great weekend, and I'll see you on Tuesday. Okay. Take care.